Japan just took a massive step toward blockchain finance, but most people are missing the real XRP connection. Reserve-level settlements, SBI Ripple Asia, and on-demand liquidity are already live. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Japan has officially moved forward with testing central bank settlements on blockchain rails between financial institutions. A lot of headlines are framing this as just another CBDC experiment. But if you actually slow down and analyze what's being said, and more importantly, what's already operational in Japan, you realize this is much bigger than a simple retail digital currency pilot. This is about core financial infrastructure, and if your channel follows XRP like we do here, then you already understand why this matters. The Bank of Japan is not testing retail wallets. They're not rolling out some beta app for consumers. They're experimenting with reserve-level settlement between financial institutions. That means this is about interbank infrastructure, the deepest layer of the financial system. When a G7 central bank begins testing blockchain for reserve settlement, that is not experimentation for fun. That's positioning for structural evolution. Governor Kazuo Ueda publicly stated that central banks must adapt to a new financial ecosystem shaped by tokenization and programmability. Those are not random buzzwords. Tokenization means bonds, equities, and other financial instruments can be issued and transferred on blockchain rails. Programmability means automated compliance, automated settlement, and liquidity routing built directly into financial assets. When the head of Japan's central bank speaks in those terms, it signals long-term structural planning, not short-term hype. Now let's connect this to XRP. In Japan, XRP infrastructure is already live. On-demand liquidity is operational. Through SBI Ripple Asia, a joint venture between SBI Holdings and Ripple, cross-border payment corridors are already functioning. This isn't theory, it's documented and active. SBI has been driving Ripple's expansion across Asia for nearly a decade, and SBI reportedly holds a significant ownership stake in Ripple itself. That alignment didn't happen overnight. Japan has also publicly announced cooperation with SBI Ripple Asia to create practical use cases utilizing the XRP ledger. Not speculation, not rumors. Practical use cases. When a country develops blockchain settlement infrastructure while XRPL-based use cases expand at the same time, you don't need to stretch your imagination to see the integration pathway. Parallel systems rarely run forever. Over time, infrastructure converges, and when infrastructure converges, liquidity consolidates. Here's what many overlook. On-demand liquidity is already available in Japan. That means financial institutions in the region can use XRP as a bridge asset for cross-border payments. The regulatory clarity exists, the liquidity corridors exist, the rails exist. Now add the fact that the Bank of Japan is experimenting with blockchain settlement at the reserve level. If retail-level modernization and reserve-level modernization occur simultaneously within the same region, you effectively create a full-stack blockchain finance sandbox. Infrastructure always comes before volume. That's how financial markets work. Systems are built first. Liquidity flows later. And when liquidity arrives, it flows through the most efficient rails available. Zooming out further, this isn't isolated. Japan is one of the largest bond markets in the world. If even a fraction of that ecosystem transitions toward tokenized rails, the liquidity demands increase significantly. Central banks are not reacting emotionally to crypto price volatility. They are preparing for tokenized capital markets. And XRP was specifically designed for liquidity movement between systems. We've also seen developments around institutional tokenization frameworks, including integration conversations involving major clearing and settlement entities and Ripple's institutional offerings. If tokenized assets begin settling on programmable rails, a bridge asset capable of neutral liquidity routing becomes extremely valuable in design architecture terms. XRP was built for that exact function. Now layer in institutional capital flows. BlackRock recently added $767 million worth of Bitcoin exposure, its largest inflow in months. The world's largest asset manager increasing digital asset allocation while central banks test blockchain settlement is not random timing. That is layered alignment. Asset managers accumulate exposure. Central banks modernize settlement. Regional infrastructure players like SBI and Ripple expand use cases. These layers stack. When layers stack, liquidity doesn't stay small. It scales. Meanwhile, market sentiment tells a very different emotional story. Bitcoin is around $67,000, Ethereum is near $1,966, XRP is trading near $135. The broader crypto market capitalization remains roughly 50% below its all-time high. The Fear and Greed Index sits in extreme fear territory. Historically, extreme fear has often coincided closer to macro bottoms than macro tops. That doesn't guarantee immediate upside, but it shifts probability discussion. From a pattern recognition perspective, and after nearly 9 years in this space, major structural developments often occur quietly during low sentiment phases. Infrastructure news drops when price action feels boring or frustrating. Then months later, people connect the dots in hindsight. There's also been public commentary from Charles Hoskinson regarding regulatory positioning and classification discussions in the United States. It's important to clarify something factually. Ripple's legal battle with the SEC lasted years and reportedly cost over $100 million in defense. The classification clarity XRP received was not handed out freely. It was litigated. Regulatory clarity is earned through process, not favoritism. Healthy debate within crypto is normal. Competition between ecosystems is normal. But from a structural standpoint, the key point is this. Regulatory clarity combined with operational infrastructure, combined with central bank modernization, creates a powerful alignment backdrop. And alignment is what we're watching. Let's bring this full circle. Central banks do not publicly test reserve-level blockchain settlement unless strategic direction is involved. Japan is experimenting at the foundation layer of finance. XRP rails are already active in the region. On-demand liquidity is operational. Institutional asset managers are increasing digital exposure. Tokenization and programmability are now openly discussed by central bank leadership. That is not hype, that is sequencing. Infrastructure first, liquidity second, repricing last. When central bank reserves, tokenized assets, and cross-border liquidity systems begin operating on interoperable blockchain frameworks, market narratives shift. The conversation moves from speculation to settlement architecture. And when that shift happens, it rarely feels dramatic in the moment. It feels gradual until suddenly it looks obvious in hindsight. Japan just moved. Most saw a headline, few recognized the positioning. And in markets, positioning always comes before flows. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching, and we will see you again in the next video. Goodbye.